We see stocks down for the day along with bonds. Gold is up. Let's jump into these charts. We're going to look at the weekly chart on the S&P 500 to start with. Interesting that the week started off down. Now remember, we use Heikin Ashi candlesticks, means average pace in Japanese. So we see the average pace in the market is up as far as the candlesticks go. Now the overall sentiment, because we're still in a confirmed down move and haven't had the price percent oscillator, that's our main indicator, crossover going up. Everything we talk about here is covered very, very well in our book, Charting Your Way to Wealth, which is available. You can see it in the show notes, a link to purchase it. We've sold, I think we're on our 8th printing right now. Appreciate all the support there. I also will tag at the end of today's training, those of you watching on video, I'll tag trainings on the price percent oscillator and on the Heikin Ashi candlesticks. If you'd like to see those that are maybe listening to the podcast, always remember everything we talk about here you can find at the website chartingwealth.com or at our YouTube channel, and please subscribe at both. Now, we see the derivative oscillator losing downward momentum. Price percent oscillators edging up a little bit. Like we said, still in a confirmed down move. So far, the week is starting off as far as the average pace goes up. Was down for the day. I know this sounds odd, but we're looking at flows of energy when we start talking about these Heikin Ashi candlesticks, and we're talking about what's happening with oscillators such as the derivative oscillator and the price percent oscillator, and then what's happening just with raw price from the opening to the closing. So those are all different things, and we look at them in different ways. And again, it's why we encourage you to practice what we talk about. The reason that is so important for us is because it really helps us understand on a day-to-day basis what's going on by practicing it. And that's why it's so important for you to download for free. In the show notes, you can see the daily market worksheet, weekly market worksheet, and trade worksheet. We want you to use those worksheets. We have them available for you for free, plus training at the website under each of those worksheets. You can learn how to fill them out and how to use them. So let's keep pushing through. So we see down for the day 0.63%. We again see a push toward moving up. Okay, price percent oscillator moving up, derivative oscillator losing downward momentum. We go to the 2-day chart, and we can see the 2-day chart ended at the end of last week, the latest full candle on Friday. So the candle that we have forming so far, which is a red open box candle, showing slowing as far as that up movement goes. It's showing us, of course, this is just the first day of the latest 2-day candle, still below the weekly trend line. The 2-day candle is, of course, well, the 2-day chart is in a confirmed up move since we had a crossover going up back on the 9th. Derivative oscillator gaining upward momentum. Price percent oscillator still heading up. And then we go and we take a look at the 4-hour chart. What do we see there? What we see is things really sliding sideways since they peaked back on the afternoon of Wednesday, the 9th of January. And again, things really sliding down in the morning, then a little bit of a recovery in the afternoon. Derivative oscillator losing upward momentum. Price percent oscillator heading down. Might be crossing over pretty soon on that 4-hour chart. But again, remember, 2-day chart still in a confirmed up move. So we've got to have that 2-day chart moving in the down direction before that 4-hour chart would allow us to jump into a down move. But this latest up move in the S&P 500 may be coming to an end, maybe not. Maybe it's just digesting the gains and getting ready to surge up again. We'll keep our eye on things, let you know what we see as things develop. QQQ, that's the NASDAQ 100, down for the day, starting the week off 0.88%. And again, we see things on, as far as looking at those Heikin Ashi candlesticks, it is a green up candlestick. But again, as we talked about at the end of last week on the S&P 500 and the NASDAQ 100, when you look at the wick on top of the prior week candle, price movement starting out still below the high that was reached there. Derivative oscillator losing downward momentum. That price percent oscillator is heading up, but things are still in a confirmed move. It is significant that price movement has pushed through the weekly trend line, the best line you could draw. It has pushed through. So that tells us We do have some upward momentum taking place, but it has not caused a crossover on that weekly chart. So again, sentiment still down on the NASDAQ 100. We look at that 2-day chart. We can see some slowing there as far as price movement on the Heiken Ashi candlesticks go. A red open box candle means weakening, not a strong red down candle, but again, weakening. Price movement on the first day of this latest 2-day candle is, of course, below, well below where it had ended the prior week, the prior 2-day candle on Friday. Derivative oscillator heading up. Price percent oscillator heading up, not as strong as it had been. We'll see how this candle ends up forming at the end of the day on Tuesday. We go to the 4-hour chart. What do we see? Again, that sideways slide and getting closer to a crossover going down. Derivative oscillator losing downward momentum. Price percent oscillator heading down. Don't have a crossover yet, but again, remember, we have the difference between the weeklies in a confirmed down move, 2 days in a confirmed up move. So even if the 4-hour crosses over going down, doesn't give us a jumping in point. The larger, that is the intermediate 2-day, and the largest chart we have, the weekly, are going against each other. So until they're moving in the same direction, that 4-hour chart doesn't give us a jumping in point. So we'll just continue to watch and see how things shape up. Now, bonds also down 0.37%. We do see stronger down movement reflected in bonds with a red down candle starting the week off. We had seen slowing the prior week of the red open box candle. Price percent oscillator appears to be flattening. Derivative oscillator losing upward momentum. Price, of course, has now dropped through the weekly trend line. Still in a confirmed up move, but that price drop over is concerning about continued up movement on bonds. We see going into a third, again, this is just two is 4 days on the last 2 full 2-day candles, and then a 5th day of down movement. We do see that we may have a 2-day crossover going down, which will, of course, take us out of any potential up moves if that 2-day rotates over. If it's a big day in bonds tomorrow, as far as things going up, might see that blue pull away from the red signal line, the price percent oscillator, but right now looking like it's probably going to be a crossover on the 2-day chart. Derivative oscillator gaining downward momentum. And of course, we look at that 4-hour chart. It crossed over going down all the way back on the morning of Monday, January the 7th, and of course been trundling down since then, down in the morning, further down in the afternoon on Monday. Derivative oscillators losing downward momentum, but that price percent oscillator still trudging down. So we'll just wait and see how bonds shake out and just what's going to happen. Again, all of this could just be digesting past moves and may get back moving in the same direction they had been before. Things are just iffy right now. So guess what? We don't trade. First rule of trading, don't lose money. Second rule of trading, make money. And remember, we're trend followers. We have to have established trends moving in the proper directions with the rules that we've set in place before we trade. Because unlike professional traders, I mean people that have to trade every day, we don't. We can wait for as perfect conditions as we can get. Otherwise, we're just blowing money. And again, practice money for us. We want you to practice with us. Get good at what we're doing. Combine everything you've learned. And then, and only then, when you feel comfortable to start spending your own money, do you spend it based upon the knowledge you yourself have gained. Lastly, we go to gold. Gold was up for the day 0.24%. Nice to see a green candle starting to form again. If you look at the top of that candle, it's still not pushed up as high as it had in the prior week. So derivative oscillator gaining upward momentum. Price percent oscillator heading up. Gold up 0.24% for the day on Monday. And we do keep looking as we see attempting on that 2-day chart to move up and above where it had peaked out back on Thursday, the 2-day candle ending Thursday, the 3rd of January. Hasn't done that yet. We can see that reflected in the derivative oscillator that's actually heading down a little. I'm sorry, price percent oscillator heading down. Derivative oscillator also losing upward momentum. But again, 2-day and the weekly still in confirmed moves. So what do we see on the 4-hour chart? Still hasn't had enough energy to cross over going up. Losing downward momentum on the derivative oscillator. Price percent oscillator looks like it's still sort of flat heading down. So until it crosses over, if indeed it does going up On that 4-hour chart, we don't have a practice trade. And if the 2-day chart rotates over at some point going down before the 4-hour chart crosses over going up, then we're done for a little while. So continue to watch. If you see gold really popping up in the morning, you might have a chance, if that 4-hour chart crosses up in the morning, to jump in the afternoon and maybe start riding gold up a little more. But we'll wait and see. But you might have an opportunity sometime this week for a practice trade in gold. My friends, that's where we are as we end the day. Again, appreciate all of the Patreon supporters. You want to really help us out with what we do here at Charting Wealth. That's how you do it. You also buy the book. And of course, depending on your level on Patreon, we'll send you a free book. Check that out. You can see Patreon link there in the show notes. And we so appreciate you. Hope you appreciate what we do. Let us hear from you. CW@chartingwealth.com is the email address. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.